Ladies and gentlemen, welcome back to the High Performance Trader, the YouTube channel that collects reliable data and builds profitable day trading systems based off that data so that you too can become a confident, controlled, and convicted day trader. And today I'm going to be breaking down the trade we took live on YouTube yesterday. See, each and every single day, it's my goal not to be green. It's to remain process oriented. And that's exactly what we designed over here at the High Performance Trader. A very simple but effective way to get in and out of the market, right? Because we have three main jobs as day traders. Number one is to identify opportunity. Number two is to execute on this opportunity, right? And number three is to manage the risk and manage the reward. And that's exactly what I try to do and teach my team to do each and every single day. So number one, you got to know how to identify the opportunity. So click this link below, check out this document, get affiliated with HPT. I will send you high-level summaries, which are data reports on this strategy each and every single week completely for free, right? Because once again, this strategy has changed my life. And it's not because it's this perfect golden strategy, but it's because I have 10 months of data backing it up. It literally has an 82% win ratio. This means over the last 10 months, 187 trades, it has been profitable for 155 of them. Okay, 82% win ratio to get you in and out of the market, and I want to show you how to execute it. So yesterday, we went live on YouTube, right? And this is the price action in front of you. I want to show you guys the trade that I took and how we were able to identify buying even when price was at a level of resistance, okay? We cleared over 78% ROI on this trade. Once again, it wasn't special. There was nothing crazy about it, but we were using our three-step approach. And we were also using the 1 hour time frame, okay? So I want to dive a little bit deeper into that as well. See, the 1 hour time frame is a tool that not a lot of traders use appropriately, okay? I want to show you how moving averages on larger time frames help me identify acceptance. And if and when you can identify acceptance, you too can be on the right side of the market, even when everybody else is focused on the other side. Okay? So click those links below. Get involved, guys. We literally have a phenomenal offer right now. $150 will get you 1 year full free access to my team. And this also comes with 4 sessions, me and you, because I want to make sure if you join my team that you know exactly what to look for, exactly how to execute, so that you too can be a confident, controlled, and convicted day trader. Okay, so now let's get back to the lesson. So now I'm going to show you exactly what it is I was looking for and what helped me get into this trade. Okay, so before you're going to see a bunch of price action. Price falls down below all-time high. So in pre-market, it was very simple. As a matter of fact, I'm going to show you guys the pre-market plan, okay? Because it's all about transparency and it's all about showing you how to approach the market, right? I can show you, look at this trade. It was green. Do it tomorrow. Or I could teach you the tools I use to really understand clearly the context that the market's giving me. Okay, that's what's going to help you get in and out of the market. Not, oh yeah, Josh said go long here, so go long. No, I want to give you guys the tools I use so that you too could understand the market conditions appropriately. Okay, you're not always going to go short in supply. You're not always going to go long in demand. As a matter of fact, if the trend is healthy, chances are you're going to blow right through resistance, right? And I'm going to show you how to do that using the 1 hour moving average, okay? So this was the pre-market plan right here. Once again, it was very simple. You can see I'm highlighting all-time high. This is a very important level. Basically, what I'm saying in a bullish scenario, I'm looking for buyers to defend all-time high, right? Watching for buyers to maintain dominance above 61323 and open print for longs targeting infinity and beyond. No upside targets. Bearish scenario, I'm watching for sellers to step up and defend previous day all-time high, along with bearish criteria off the open for short plays, targeting previous day high, end of day, so on and so forth. So once again, every day, my approach, I have a bullish and bearish scenario, okay? How do we define who's controlling the open? This is where our approach comes in. Our simple 3-step approach, okay? So the market opens, I'm watching all-time high, we get some selling, buyers push right through it. Okay, now this horizontal line, which is available for all premium members, is the 1 hour moving average. Okay, this is very important. Okay, so I'm going to open up a chart here to the left or to the right so that you can see what it looked like on the 1 hour time frame as well. And this will give you a little bit more context. Okay, so price opens up below previous day all-time high. Look where the 1 hour trend is. Okay, is very extended to the upside. Okay, so there's a large gap between price in the 1 hour moving average. Okay, well, the principle behind moving averages, any gaps or extensions tend to get filled. Okay, so if you're watching price and it gets extended from the moving average, chances are it's going to come back down to the moving average, or it's going to slow down and allow the moving average to catch back up. Okay, that's the principle behind the moving average. It works on the 1 minute, 2 minute, 2 hour, 1 hour, daily. It doesn't matter. The principle still applies. So what I was able to do was understand the principle on a lower time frame and learn to watch it on a higher time frame. Okay, this is how we identify acceptance, right? So we get tons of selling below previous day all-time high. Price rallies up into it. I don't want to go short. Why? Because the gap in between price and the moving average. So price rallies up, shoots up very high, right? And now as price is rallying to the upside, we get extended from the 1 hour moving average. And you'll see here, we got pre-market high right here. Price comes into it. Now, once again, guys, what do we have right here? A pocket. There's a pocket in between price and the moving average. So what happens? Price rallies up, closes the pocket. Okay, this is very important that you understand this. Okay, so now price is rallying. I wasn't able to get into the market long right there. It happened very quickly, and I am not the type of trader that chases his entry. Okay, so I sit back, I relax, and I go, listen, if the market comes back to this level and I get appropriate entry criteria, I will enter the market long. And that's what happened. Price came back into the level. I didn't get the appropriate entry criteria, but I still looked at price, identified where the 1 hour trend was, and deemed this trend healthy to the upside. Okay, so now there is no chance for me to take a short until price gets back below the 1 hour moving average, right? So price started to look something like this on the chart on the right. So now I'm looking at the chart at the right. We've identified a healthy trend. I don't want to trade against the trend because this right here is buying acceptance. We know this because we are not extended from the moving average and it's trending up, right? So now I just need to identify an entry, okay? So we got into the market right here at 11:20 a.m. Why? Well, price came into the EMA cloud, bounced off the outside of it, okay? We're right next to the 1 hour moving average, right? You guys can hear me in the live say, listen, we're bouncing off the 1 hour. If we get a red bar that gets ignored, I'm getting in the market long. We get in the market long right here. Where does our stop loss go? Directly below the previous candle. Okay, so we enter in the market long right here. My daughter comes back from kindergarten, sits on my lap, and we watch this trade shoot up to the upside, right? So now, as I'm watching price bounce off the EMA cloud, completely ignore the previous candle, I'm in the market long, and my stop loss goes right below it. And then you can see price rallied all the way up, where we ended up getting out of the trade at 11:50 p.m. So overall, it was a phenomenal opportunity. But if we didn't understand the concepts behind the 1 hour moving average, we would have never been able to capitalize on it, right? So I hope you guys enjoyed this video. This principle has helped me tremendously to identify opportunity each and every single day on the market. So once again, if you guys want more information, all you have to do is click those links below, get involved with our team, and I'll see you in the next lesson.